everybody, welcome back to Eggs the Podcast. Today's special guest is Jason Kruger. He is a partner at Citrin-Couperman. How are you, Jason?
Good. Thanks, Ryan, for having me on.
Absolutely. Yeah. Thanks so much for making time for us. We're glad to connect with you.
Really appreciate it.
Absolutely. Looking forward to the call.
Jason, can you give us just a brief overview of who you are and what you do?
Yeah, absolutely. So I'm a partner, as Ryan mentioned, at Citroen-Couperman. I'm part of our BPO group, which stands for Business Process Outsourcing. In its simplest term, it's outsourced accounting and advisory support. So we work with companies that are in the small mid-market to provide them the accounting and financial leadership that they lack or that they need to get to that next level. And we also fill in the gaps, everywhere and in between. So we're doing everything from bank reconciliations, paying bills, but the real value is in establishing the right foundation within the accounting and financial arm of the business. So they're getting consistent, they have confidence in what's happening from a day-to-day perspective, but they're also getting consistent reporting and information and visibility into the financial side of their business so that they can ultimately use that to make decisions to achieve the goals that they have. And so through that, then, that might be through potential exit at some point in time, increasing profitability, margins, those types of things. But as we all know, without your numbers, it's hard to make decisions and understand the impact of those decisions.
Sure.
Yeah, very true.
So as we were talking a little bit before the show and learned a little bit about you, that there's sort of both an entrepreneurial side and sort of a, I guess, traditional corporate side to you. I wonder if we could talk just a little bit more about your experience and just sort of the trajectory or the through line of your career, which is, moving from, college into a career into this and that, and then making a choice to be an entrepreneur and stuff like that, just so people understand the breadth as we get into our conversation.
Sure. So my background in college was obviously accounting and finance. I went straight into public accounting, most of that time with the Big Four. Spent a lot of years with Deloitte in the financial statement audit side, close to 10 years doing that. And what I would see, even with our clients at Deloitte, were companies that looked at accounting and finance as kind of a necessary evil, meaning I got to pay my bills, I have to invoice, got to collect the cash so I can make payroll. And then, oh, by the way, I got to file my taxes at the end of the year. And they weren't really leveraging the accounting or finance arm as a value driver to their business to allow them to make decisions to achieve the goals that they had. And the other challenge is that a lot of these companies in the small mid-market, they lack the talent or sophistication, or they've outgrown their team. And so they started with the bookkeeper. Now the bookkeeper has been promoted to maybe controller, but they've outgrown that sophistication. And really what they need is that additional level of support and guidance to help them to, again, take their business to that next level. And so I ended up leaving Deloitte back in 2008, and I started a company called Signature Analytics that really focused on, the outsourced accounting, CFO advisory support for companies. And the idea was to not necessarily take over all of the accounting, but understand where the pain points might be able to fill in the gaps, provide that leadership, and take them to the next level as it relates to that side of the business. So they were getting true value out of that. And so we grew that to over a 15-year period to about 75 full-time employees. And then ultimately decided that the timing was right and it was a great fit to join Citrin-Couperman back in November of 2024. So we were acquired by Citrin-Couperman and we slid right in to their practice. And they had a division, or they have a division that provides very similar services as ours. So the fit was good, the culture was awesome, the team is great, and we were able to slide right in and really help to enhance that group as part of Citrin-Couperman. Citrin-Couperman as a whole also provides your standard audit, tax services for the mid-market, but we also provide additional what we call advisory, which we fall under. We do system implementation work, we do M&A, transaction advisory type work, valuation. So really across the board, full service as it comes to the financial arm of our clients' businesses.
That's awesome. Being able to scale a company up to 75 employees had to be a very interesting thing to do. Can
Yeah.
you maybe talk about that pain point of growth and um, the decision to get acquired? Was it something that you were just, it's that time, or was there other motivation to
Mhm.
actually sell the business and get acquired?
Yeah, I think as with everybody else, I've made a lot of mistakes along the way, and there's a lot of things I wish I would have done earlier. I'd like to say that I had a business plan outlined and everything, but when I started, but I, really just kind of jumped in and said, "Hey, we'll make it happen." But some of the things that were critical that I found from going from basically 0 employees to 75 were establishing, as soon as possible, establishing processes within and building the infrastructure and scalability, as you talked about, Mike, which is, um, yes, as a small business owner, I can manage everything that's going on in the business, but as it continues to grow, there's only one of me, and if processes or there's no processes or infrastructure to support that, ultimately, things start to break because there's only one of me. And so what was critical is establishing, ultimately over a period of time, a management level structure that we had so that ultimately, the company was not dependent on myself. And then moving forward after about, I think it was probably like 8 or 9 years, I ended up hiring a CEO to come in and provide that additional leadership and the experience in areas that I didn't have experience in, allowed us to continue to achieve to move forward in the goals that we had. And I like to say that um, I don't have too much of an ego, and I could use all the help I could get. So bringing on a CEO who which made sense. We defined our roles within the company. We worked very well together, and we just were focused on the ultimate goals of growth of the business and providing valuable services to our clients. But as a business owner, and if I was also looking at what, if my ultimate goal was to exit like we were, how do I always look at the business from a perspective of, how do I look at it from valuation? How do I maximize the value of the business? And I knew if a buyer is going to come in and buy any business, if everything relies on the owner, well, and they buy the business, the owner walks away and everything falls apart, there's no value in that business. So how do you build a business that's not relying on any one party or person and that can operate consistently beyond that? And so that was a key component to that in building the foundation and processes. The other part was, and I can't say this enough, which is, knowing all aspects of your business. So my background's accounting and finance, and I know that as a business owner, a lot of business owners start because they know their service, they know their trade, but they don't know other aspects of a business like sales, marketing, accounting and finance and HR even. And so what I learned pretty quickly is that I needed to learn as much as I could about all the other aspects. And where I've seen businesses fail is where they say, "Hey, great, I'm going to start a business. I know the service or product, so I can do that." That's the operational side. And then to grow, once we get big enough, I'm going to hire a salesperson, and they're going to grow and do this over here. And then I'm going to hire an accountant or a bookkeeper, and they're going to do this over here. Well, if you're not overseeing those roles, they can go off the track very quickly. And so what I learned very quickly, fortunately, I have an accounting background, but what I learned pretty quickly is how to provide oversight and make sure we have the right processes on the sales side. Make sure I understood, our marketing strategies and how to oversee that. And so it's really about hiring the experts, but they still need to be managed, or else you're just kind of hoping for the best. And we all know that hope is not really a good strategy. So those are some of the nuggets that I used and learned as I was going through that process.
Yeah. One thing I wanted to maybe spend a little more time on, if you don't mind, is this notion of finding partner. So, one of the things that it's come up more than once is this idea of, I think a lot of young entrepreneurs especially try and go out and they start a business maybe around a trade or a craft, something they do already. And so then they start doing their business, not so unlike what you did, right? You were an accountant, you decided to start accounting.
Yep.
So, But then what ends up happening is, to your point, there's blind spots, right? You start to identify the things that you don't know, or the things that you're not maybe as strong in. Even if you have a rudimentary understanding, it's just not your focus.
Yep.
So, this notion of, I guess, first of all, knowing when to take on a partner or make a decision when you need to find a yin to your yang or something to help you, augment your skill set. And then also like finding these people in the first place, maybe in your case, it was somebody in a close network or something, but where would one look for these kinds of relationships? And then how do you go about vetting somebody to do it?
Yeah, I mean, for me, it was critical because I'm looking at, the business, and again, if I just wanted to be the man and wanted to say, hey, I'm the CEO, I'm the founder, I'm the owner of this business, and I control everything. That's one way to approach it. My approach was, though, that, what are my ultimate goals for the business, and my ultimate personal and career goals from a growth perspective, and everything else. And it was to grow the business in a way that required, talented people to help us to get there. And I was looking at myself, and quite to be honest, it can be lonely at the top, and it can be a ton of work. I mean, you become a slave to your own business in a lot of ways, right? And so having somebody else there that we could split the duties and really focus on the areas that we could provide the most value to the business were critical for us. I mean, just as an example, my colleague Peter Heald, he's also now a partner at Citroen-Couperman. He is fantastic at, even the simple stuff, like he can whip up a PowerPoint and present it and be able to communicate effectively to, the greater team, and communications to the team as a whole, in the direction. Whereas, it'd take me 3 times as long to put together a PowerPoint just because I don't have the skill set that he does in those types of things. And so, being able to balance somebody that can leverage the areas where I don't have as the talent or the expertise, and balance each other off each other, is great. Pete doesn't even have an accounting background, but he has a business leadership. He's a president of a high growth service-based company. And so that was the experience that I wanted to bring in. We had enough accountants and people with a financial background on the team. We didn't need another person like that. So having somebody like that we could balance off was fantastic. And the way that we found Pete actually was just through relationships and networks, and within the city that we were in. And so I would highly recommend that versus trying to post on a job board for a CEO or somebody else, because you're kind of going in blind about it. You're hoping for the best, and if you can leverage relationships and experiences that people have had with that individual, there's so much more value to that.
Yeah, I think that makes a lot of sense. And I mean, it's actually a crossroads that we're at in our business right now, is that we're making a pivot we run a design agency or a brand agency. And we're trying to take a pivot into more focus in the medical space. So med device, med tech, biotech, things like that. And we've always been kind of a generalist agency, right? We always had clients from a million different sectors. So now we're trying to narrow down into med device. Well, there's, we've worked in regulatory environments for health insurance companies and things like this over the years. So, we have some experience doing that. We have one med device company right now that we're having so much fun with that it's inspired this pivot. But the big thing that we're running into is, okay, well, there's specialized networks, specialized knowledge, specialized, people know people in that world, and we're on the fringe of that world, right? I mean, we have our one client in that space, but, we're trying to move into it. So now we're going, okay, well, maybe, I'm really good at what I'm good at, but I'm not, a pro at all that. And the time it would take me to learn all that and become competent at it probably isn't worth it. Yep. And so it might be better to find a partner or a sales guy or somebody who can be a CFO or a CEO even of our business that can start taking the reins on the business development side as it pertains to med device clients specifically. We're moving into that world. And so, so we're having this hard time because I don't really have that many people in that network, but I have to find somebody that wants to be a part of an agency, and or even start a new agency, or something, restructure or something to support a new partner, and then also somebody with this specific expertise. And so because we run a team of designers, we have a great creative team, but our but we don't have the same sort of breadth of knowledge on the business front. And so,
Mm-hmm.
so we're having a really hard time solving that problem. And so, but I can understand that, just winging a prayer, putting it out there on ZipRecruiter or something,
Right.
hoping we get a great CEO probably isn't the way.
Yeah.
But, so hopefully we can network our way into finding somebody that's interested in collaborating that way. But it's been a challenge for sure. And, but it's become really apparent in the last little while where my gaps are, right? Like, I mean, I've run a creative business for a long time. I mean, 20 years we've been doing this, but, I know how to do that. But now it's like, okay, well, now we're trying to up our level of sophistication. We're trying to communicate really complex ideas in new and simple and innovative ways, and, all this stuff. And we're doing great creative, but, we don't have the connections in that realm, even with all, I mean, we spent, a decade working for all the big national health insurers and stuff. But it's like, but even, there's a silo between the health insurance companies and the hospital chains. And the, it's like, so it's been a bit of a rough transition, or, I mean, and luckily we're pretty early in it, so we're not feeling too bad about it yet, but hopefully we can find a partner.
Yeah, absolutely. And, again, what I kind of, as I mentioned before, what I've found and seen personally and also with clients is it's so critical that you find somebody that you can collaborate with as well. If it's just a situation where you're like, hey, I'm going to hire this person, they're going to go manage the life science, or I'm sorry, healthcare, or medical side of our practice, and then I'm going to go do this over here. Then 6 months later, you realize, hey, this is not going how I want it to go. And so collaborating with that person, and what I found is so important is setting, goals, expectations, how you're going to get there, what's our approach, and really understanding and so that you can really track and, hold each other accountable. Is critical. And that's where I mentioned on sales is, I see a lot of business owners saying, well, I'm just going to hire a sales guy and they're going to go sell. Well, great. But if you don't understand what they're doing, you're just kind of like crossing your fingers and hoping for the best. So how do you hold them accountable? What are the activities that they have to do to be able to produce? And how can you make sure that they're meeting expectations?
Yeah, well, and I imagine you guys ran into the same thing we did, basically being a service business, is, the just hiring of a salesperson. I mean, that'll get you maybe some of these transactional kind of offers. Hey, I need a website. You make websites. Let's meet in the middle. But it doesn't get you your best clients, and it doesn't get you the people that you really want to work with. The way you get those is through meaningful relationships with people and networking and friend of a friend, or, these kind of things. And that's how you, build up a better quality customer, somebody that you're more, I guess, happy to serve. And so, or at least that's been our experience. And so, we've tried hiring salespeople and tried doing all that kind of stuff. But what we find is that we get these really shallow, low impact relationships where it's just, and they don't really care about doing good work or whatever. It's just, I have $500. I need something. Can you do it? Or I've got, whatever the budget. And so, so we found that, really you've got to have people who are invested and want to be on the team and are interested in being a part of the business and really helping it grow, because at the end of the day, it's all the relationships. It's not really, so tactical. I think if you're running a, maybe a business where you have a product to sell, people either love your widget or they don't, but it's a little different in the service business.
Yeah, absolutely. It's all about relationship. And, when we did start to build out our sales team and function, I mean, that their process was about building relationships. It was with building relationships with the right people and digging deeper, and not just being, kind of like you said, a mile wide and an inch deep. It's about sitting down and giving them that confidence and trust in who you are as a representative of the company, and also the services and the value of the services that your firm can provide. And so when we, as far as our processes around our sales team and business development team, it's really about their activities is going in the market and building those relationships with bankers, with other service providers, attorneys, at the time is maybe other CPA firms or partners that would refer those quality clients to us, and that was successful to us. And another thing, actually, I've heard and I've seen to some extent is that a lot of times everybody thinks, oh, well, the best salesperson's one that's all jazzed and is excited and hits just goes out there, can talk to anybody. And what I found is a lot of those individuals, or extroverted personalities type people, can be more a mile wide and an inch deep, and not really take the time to get into the details. And I actually heard a study that introverts are actually perform better in sales than extroverts do. And I think the reasoning behind that is because they're able to actually sit down and listen and really dig deeper into the conversation than what maybe an extrovert might be doing, which is talking, doing too much talking. And again, I'm generalizing here, but doing a lot of talking, not really listening, not really getting into the guts of the solution for the client. And I thought that was an interesting study because everybody thinks that, oh, he's an extroverted person, great salesperson. And what I found is it actually is, the opposite.
Yeah, I think there's
Yeah.
actually a thing that's going on too. That sort of the salesperson has evolved, right? I mean, there was always the cliche of the car salesman or whatever, the
Yeah,
sleazy guy that was kind of like that.
right.
And I mean, those were the most extroverted and the most whatever. But I think that people have a little better nose for inauthenticity and things like that now. So it's not
Hmm.
just about being charismatic and wooing me with your cool words. Like,
Right.
I think we're a little bit more sensitive now, or a little bit more on the ball as it pertains to developing a real relationship, or understanding if you're just trying to blow smoke,
Yep.
than maybe our less sophisticated, a generation ago or a couple generations ago, might have been. So, and
Yep.
maybe that's just me speaking as somebody of this generation.
Yeah, absolutely.
But
Yeah,
it
I
does
think you're
seem to
totally
me
right.
that salespeople have evolved, and just like even in our own agency business, I mean, we spent a lot of years working for car dealerships and big car chains, and it's and we noticed a shift in the way they talked and the way they
Hmm.
spoke and the way we messaged and things like that, which was, and a lot of it was to try and conquer that old used car salesman kind of mentality,
Yep.
because that's what everybody thought of them.
Right.
And so anyway, so we spent a lot of time doing that, but I think that that's sort of a sign that there was this shift in the way that people sell. And so even if it's selling, accounting services or our creative services or whatever, like, I mean, if you come off as inauthentic because you're just trying to move numbers, I
Yeah.
think for a lot of people nowadays that doesn't resonate.
Yeah. And then what we do is, like you said, it's a consultative sales process. So it's really digging into, how do you, what is the pain point, and do we or how can we define the solution that alleviates that pain point? And so it's getting into the weeds a little bit and talking through that, what it means for them, getting in the client or prospects, head and their understanding of what's really valuable to them, has really resonated and done well. And again, we're not trying to just, check a box and say, yeah, we have a sale, because just like you guys, it's our clients are long-term clients that we always want to be driving value for. And so we have to prove ourselves every month. And if we're just trying to get in there for a quick win or a quick sale, that's not going to turn into a long-term relationship. So it's about understanding where there's value, where the value and the cost point align in the mind of the client, and then driving that value and showing that we can do that for the long term.
Yeah, well, and especially with a business like yours and like ours, it takes so much time to onboard somebody and get integrated into their
Hmm.
systems, and in your
Right.
case, understand how they spend money or understand where the problems are, things like that. That it's like a little month to month hit is actually not that good for you. Even if they were,
Right.
you had a salesperson driving a lot of people into your funnel, it's like, yeah, but if they come in for a month to fix, accounting error A, or
Hmm.
tax problem B, it's like, okay, well, that's great, but that $500 isn't anything compared to the $50,000 a month deal that we have going on with this client.
Right.
So it's
Absolutely.
yeah, no, I think it makes a lot of sense.
I was wondering if we could maybe pivot a little bit if we could. At the start of this conversation, you actually talked about maybe leveraging your accountant to help your business grow.
Hmm.
Um,
Yeah.
that's kind of a people don't think of it that way. They think of an accountant as like this is a necessity just to do my taxes. It's the only reason
Hmm.
I have an accountant, just to stay legal. What are
Yep.
some things that you can use to leverage your accountant to actually like probably in your example you when you started your business you knew that the end goal was to sell, and I'm sure that
Hmm.
like leveraging an accountant to sell a business at the start helps dramatically when you go to actually sell it. Can you maybe break that
Yep.
down for us?
Yeah, absolutely. I mean, anytime if you are looking to exit, the first question that somebody's going to ask you is, can I see your financials, right? So to them, the most important thing is your financials. So as a business owner, that should be one of the most important things to you as well. And as a seller, you can either hit print on QuickBooks and give it to a third party or a buyer, and then let them make up their own story or determine their own story about what's happening in your business. Or you can give them a nice package and nice, information that tells the story that you want to tell of your own business. And I'm not saying that you're changing any numbers, but you're positioning it to look credible, to give yourself credit. To give yourself credibility in the process, and know that you have that you have a good story to tell. And so the way you present the financial information just from the beginning is critical. Going back to the beginning, one of the first things that we do with our clients, or actually probably the first thing that we do with most of our clients, is help them to understand just the cash flows of their business. Because as a business owner, cash is king, right? You gotta pay your bills, you gotta collect cash, and you gotta make payroll, and then you gotta do the same thing again next month. And so understanding your cash flows and when cash goes in and out, and be able to project that moving forward, at least for the next 3 to 4 months, if not further, is critical. And that allows you the confidence in how you make certain decisions on your business regarding investments or investing in your business, hiring, making an important hire. Can you afford this person or not? And that's before you even get into understanding your financials at all. So it's, can we project out the cash, and the cash flows of the business is critical. If I'm just running by kind of it in my head and looking at my bank account, I don't have a lot of visibility into what's happening over the next 3 to 4 months. And just having that visibility gives me a lot of allows me to the sleep better at night thing, right? I can sleep better at night knowing that. The next step then is to make sure that you have a good process to close the books, and then be able to generate some level of financial reporting on a month-to-month basis. And what that does is it gives you better visibility into the true performance of your business, and how profitable you are. If you understand how profitable you are now, and you can see the numbers, you can then identify areas to make business decisions to improve that profitability. Or you have a better understanding of how you can make investments into the business, knowing that I have the flexibility to make investments to grow the business over time as well. And so, the first thing is understanding our margins, and the margins of our business, meaning what I sell my product or service for, and what I paid to what I paid to have that product or service either manufactured, or what I'm paying the service provider to perform. And so if I understand the margins, a lot of times I'll talk to business owners and say, well, what are your margins, on your product? You're selling a product, let's say, what are your margins? Well, it's between 40 and 50%. Well, that's a huge delta, meaning we want to get down to the one percentage point and really have a lock on that. Because if it's 45%, and let's say you're a $10 million business versus 50%, 5% on a $10 million business is, $500,000. And so we want to make sure that we, really understand that $500,000 could be going straight to the bottom line. If any one percentage point is $100,000, where it could go straight to the bottom line, or it could go back into reinvesting in the business. So having that locked in, and then saying, hey, how do we now make decisions to improve upon that through a variety of ways, becoming more efficient, certain way that we sell the product or our pricing, different ways to pick up percentage points makes a significant difference in the health of a business, and then also as you look forward to exit. And I guess the last thing I'll say is, if a company does want to exit, a lot of times they'll see a range. They'll say, hey, what's your business worth? Well, a business in this environment may be worth like a 4 to 8 times what they call EBITDA, or basically your your bottom line. 4 to 8 times that might be your standard valuation. Well, if I'm a business owner, I want to be closer to the 8 than the 4, because that's double the valuation on the same bottom line, or the same revenue even. And so how do you do that? And that's through understanding your numbers and understanding the risks that a buyer might see as to why they would value it at a 4 times multiple versus an 8 times. And some of the easy things, or one of them we talked about, is reliance on owner, is a big risk. So how do you diversify that? How do you diversify your clients? If 80% of your revenue is in one client, you basically have a business that is not really valuable at all. Because if that client leaves, then you don't have a business. So how do you diversify that? How do you create processes internally that you have structure that can be repeatable over time? And those are the areas that the buyers really want to see.
Yeah, no, I think that makes a lot of sense. And actually, I think, you mentioned the, just the difference between a percentage point or even like a multiple in the case you were just talking about, 4 to 5 or 5 to 6 or whatever multiple.
Mhm.
I think it's interesting, and maybe it's the sign of sort of the unsophisticated, right? Is when they do play kind of fast and loose with those numbers, when it's like,
Mhm.
between, 40 and 50%,
Yeah.
because I don't think your sophisticated, business folks probably do it that way. And maybe it matters more when there's more money on the table. So maybe this is
Mhm.
why people are a little more casual with it. But I think that's a really great point, because even as a small business, even if you don't have a lot of money coming in, maybe 1% is $100, but
Yeah.
that's $100 more towards your bottom line. It's $100 more you get to put in savings or invest. It's $100
Yep.
more worth it towards equipment or to make a payment. So
Yeah.
it's like, even if it's not a lot of money, it's still probably worth discussing that these little percentage points are working towards that greater multiple. I mean, if the difference is finding taking yourself out of the process as an owner by creating better processes,
Mhm.
then but if that gets me from 4 to 7 multiple on my sale, then it's totally worth doing that one little thing. And well, it's
Yep.
probably not a little thing, it probably takes some work, but I
Yeah.
mean, but at the end of the day, I mean, just that one factor might be enough to jump you 3 or 4x.
Mhm. Right.
And so it's an interesting observation. I mean, it's a great point that just paying a little extra attention to those numbers or being a little more vigilant, even if it seems small,
Yeah.
is probably worth looking at.
And it's so critical to do that early versus, hey, I want to sell, now help me, get the books in order so I can sell. Well, at that point, you're just kind of saying, okay, well, we can't really do anything. The numbers are what they are. We can try to put lipstick on a pig and like kind of, you know, at least put a package together so that you look credible in some sense, but there's not a lot you can do from a business enhancement perspective. So if your goal is to sell, even if it's in 5 or 10 years, always have that in your mind of how do I maximize value of my business at all times? Because you never know what's going to happen in your industry. Maybe your industry is going to get super hot and you thought you were going to sell in 5 years, but all of a sudden you're 1 or 2 years, or even now you're saying, oh crap, multiples and valuations are 2 or 3 times higher than they've ever been. You can take advantage of it if you're ready now and you have all of that foundation laid versus, well, it is what it is, and now you're leaving so much on the table at that point.
Yeah, nope, I think you're right. So to that end, in your sort of role as an advisor, as you're helping different companies start to explore these things, these are obviously some red flags or some gaps that you could probably identify pretty easy. Places where business owners are maybe being a little remiss in their accounting practices, or maybe just not paying enough attention to their business. Are there any other sort of like red flags or things like that that you come across that are common mistakes that small businesses are making, or small to mid-size, the type of clients you would work with, that
Mm-hmm.
are obvious gaps that just fixing this thing is it's easily overlooked, but if they handled it, it would be make a big change
Mm-hmm.
in their business?
Yeah, I think, well, one is, again, that visibility on cash flow is critical. That just gives you the peace of mind to know that you can operate your business and look forward, a number of months. Um, I think, companies that are manufacturing, inventory always seems to be a black hole. And that can, if you don't have a handle on what your inventory values are, evaluations are, um, that directly impacts the profitability, what your numbers show. And so you may think that you're profitable, but if your inventory numbers are wrong or not accurate, you may not be profitable at all. And that's a huge, I mean, that's, just critical for business owners to know, because if your inventory again is not accurate, that means your cost of goods sold is not accurate, which means that your margins aren't right and you may or may not be as profitable as you think you are. The other thing I would say is, always, relationships with third parties. I mean, you may not need a banking relationship now or financing now, but building that relationship now is critical. And so if I say, hey, who's your banker? And they say, well, it's the person behind the desk when I walk in. the Wells Fargo branch, then you don't have a banker, right? So, Wells Fargo is fine, but I'm a big promoter of the local banks that you can build a relationship with, and they want to build a relationship with you, and they see your numbers and they can help you and they can coach you and they can provide advice on, the direction you might want to go as far as growth and through acquisition, how to finance different things. They have good relationships in the community. So those are the individuals you want to build a relationship with so that when the time is right, you built that relationship, there's trust. Banks have a lot more flexibility in lending than you think they do. They don't just look at it. They do have somewhat of a box like, hey, you got to meet these certain criteria, but they can go to bat for you if they know that you're, a strength in the community. You're well known. You have a good reputation for your service and product line. I mean, all of those are important and really help to drive you forward. And a lot of people say, well, banks will only give to people that have money, or that don't need it, right? Well, be one of those people that don't need it and build that relationship now so that when you do need it, maybe you can get a line of credit now, and then when you do need it, you have that ability to do it. It's also, banks don't like to be looked at as a transaction. Like, hey, you're a bank, you need to give me money. They want to build a relationship. And so building that relationship early is important versus just going, when you need it and saying, give me money, and then, holding them to the fire. Like, they're not going to go to bat for you in that case. They want to build that relationship.
Yeah,
Yeah, no, that makes a lot of sense.
that's something that I didn't realize until recently, a few years ago, is that having that person that you can just go in and, hey, Judy, how you doing? Like, it's great to
Right.
see you again. Have that
Yeah.
personal relationship with your banker, so that way when the
Yeah.
time comes, you have that as well. Um,
Right.
question in regards to, um, obviously you want to have a good accountant early on in your business, but are you, is there for the first 10 years of my business, I was just sole prop, just running it myself,
Hmm.
doing my own taxes on the side. Um, I, Probably 6, 7 years ago, I switched to an LLC. I had more income coming in, and went to an accountant from there. But um, is there like a baseline where you hit that point? Now's the time to get an actual accountant, or
Hmm.
um, I mean, can someone do it on their own, or should they just have someone
Hmm.
doing it for them? I mean, because I'm sure it's not
Yeah.
a cheap thing, to
Yeah.
hire someone like you and run your books annually. Is
Yeah.
there? Can you break that down for us?
Yeah, absolutely. I think, yeah, it's tough. I mean, financial acumen is important when you start a business, but I also understand that when you start a business, a lot of people don't, they're bootstrapping. They don't have there's not like there's leftover cash laying around, and they're doing everything they can, and funds are tight, can be tight, and so I understand, when you're getting started, I would still recommend at least having somebody that can support on a part-time basis, even if it's a low-level bookkeeper that's, not overly expensive. Once you get probably at least to once you get up to $1 million in revenue, then I'd be, looking at how do I, how do I continue to either invest or slowly get better information, or always be getting good information from an accounting perspective. And that's where, our model is very flexible and scalable too, which is you don't need to hire a full-time CFO. You don't need to hire a full-time expensive controller. But you do need somebody that can provide you with that level of expertise and support so that can talk through and educate you on, hey, this is what's happening in your business financially. This is what you might be, looking at or be concerned with. If you're 5 million, once you're at 5 million, you absolutely need to have, in my opinion, you need to have, good financial acumen, and you need to have a good process that closes your books every month, and where you're getting good financial information that you can make decisions on. You need to set aside time to be able to review your financials, and timely, so that you understand what's happening, and you can understand, okay, here's the direction I'm going. And then over time, obviously getting some level of real-time data or flash reports is also critical, so that you can track, what your revenue projections are going to be before you even start the month, not 15 to 30 days after the month ended. Oh, dang, we were a lot less last month, and now you're already in the hole because now you have bills that you have to pay, and your cash flow is not going to be coming in like you thought it was going to be. And so as you build up, I mean, that's where our model is very flexible, which is we can fill in the gaps, but you're not committing to yourself to paying for a full-time resource. And we can fill in the gaps that those various resources provide the leadership that you're not getting. So
Yeah.
Yeah, that's
Yeah, no,
that's
that makes
definitely
sense.
critical.
Yeah, well, and I just kind of wanted to expand on that same question a little bit by just starting, outsourcing versus building internally. Is there a line where it makes the most sense? Is there always a scale or a size of company where it makes sense to build it internally,
mhm.
or is there always an argument for outsourcing this sort of stuff?
Yeah, I mean, I'd say almost all cases there's always an argument, unless it's a very, well-funded, startup, right? Like, or a spin-off of a large corporation or something. But even then, at the beginning, it can be outsourced. I mean, most of our clients are 10 million revenue to 100 million revenue, and that tends to be the sweet spot. Once you get over 100 million revenue, then, maybe it does make sense to start, or to be, have a fully functioning internal accounting department. But where our model works is, we know where it breaks, and most of our clients have internal personnel, and they're building that over time. And then as they get to a certain point, then maybe they transition away from us. But where we can provide the value is, again, in filling in the gaps and providing the leadership that they lack. And so they don't have to make that big investment for a $150,000 controller or a $250,000 CFO, or whatever it may be, where they can leverage us till they get to that point. And so that point can take years, and so we can build those relationships. And they say, hey, you know what, we've grown to a point where we need to hire an internal senior accountant, or another accounts payable person, or whatever it may be. Great, hire them up. We can still manage your team and provide the oversight, fill in the gaps, make sure it's all getting done. And so it really depends on the company, the industry that they're in. We have some clients that are well over 100 million, and we work with them and provide great value. And others that, they're at 50 million, and it does make sense to them to hire and have a full team.
So, does the $80,000 a year person fit into your world, or is that just not worth your time?
80,000 like revenue, or
Well,
80,000 like,
I'm just saying, like, some businesses don't make more than 100 grand a year. So does that
yeah.
even make sense to you to take them on as a client, or is that,
Mhm.
pretty much not worth it to you?
Yeah, that's probably going to be on the small side for us.
Yeah.
Like I said, there's always a cost benefit too for them, and that's where there are a lot of good, kind of what I would say, bookkeepers out there that can kind of manage and get what you need from that perspective. Um, and from that perspective also, if you're a business owner, that's where I talked about knowing your business, knowing all aspects of a business. So how do you educate yourself on all areas of your business so you can um, you know be successful in running a business? So self-education on understanding the basics of financial statements and how to read financial statements, self-education on marketing, and the design space that you guys are a part of. Like you were saying, Ryan, earlier, we're looking at the longer term relationships. If someone's like, hey, $500, do this, and then I'm out, that's not really what we're looking for. And so, it does have, for us to provide the value that I feel at the right cost point for a business owner. It, probably does have to be, $1 million plus in revenue.
Yeah, no,
Yeah.
that makes sense. And I think that, there's a good range of people. I
Probably
mean,
similar with you guys as well.
yeah. Well, and in our business, I mean, we have, a CPA and a bookkeeper, and, we have a small crew of people that we outsource, but we don't use a company that's, as big as you guys for this sort of stuff yet. Right. We just don't have the revenue to justify it. But
Yeah.
to Mike's point, I think there's a range of professional resources that you can get, regardless of the size of your company. So if money is just not your thing and you want to be able to
Yeah,
outsource some of that, you can find people at your price point, whatever it is.
absolutely. Yeah.
Yeah.
Yep.
So one thing I wanted to talk, and we've kind of touched on some of these things already, but like in your role as a mentor or more of as an advisor, and this maybe leads into your leadership functions, what are the things that you come across with business owners that are the things that people are maybe most resistant to? So you start to present ideas and you start to, spot holes. Where are the areas that people push back the most?
Yeah. Well, I think a lot of what we do, as I just mentioned earlier, was education, right? So they have to understand it always comes down to the value that they the value and the cost have to align. And it's not the value I'm telling you I'm giving you. It's the value that you as the client or the business owner see or perceive, right? So I got to get in the head of the business owner and understand how do they see value? Because I can tell you all day long, look at all this great stuff I'm doing, and if they're like, either I don't understand it or I don't, that's not valuable to me, they're not going to want to pay for it. So number one is making sure that you're aligned on where they see value. So that's critical. I think that, and again, I apologize. I want to start going off on a tangent and remember. Can you repeat the question now? Sorry.
Yeah, no, I was just asking, what areas, current leadership of companies who come to you guys for support, where they push back on you the most,
Got it.
and so education is clearly a factor there. I mean, if they
Yep.
don't know much about it, it's hard to justify your, the costs associated with hiring somebody. But I
Yep.
wonder if there aren't, sort of telltale markers or things that are like common that you've run into more in your leadership capacity or in your
Mhm.
sort of advisory roles, not necessarily just brass tacks or accounting, where you've run into issues with these different leaders, where maybe they just have a fundamental disagreement in some area with you that's common across businesses.
Yeah. I would say also, sometimes we get hired and the business owner says, hey, great, I want this reporting and that's all I want. And you're saying, well, what to get there, we have to start with, stage one, which is can we trust your financials and how it's being entered from a day-to-day basis? So we can't go, and we try to educate our client on is we have this wheel of day-to-day accounting drives the monthly close process, drives the reporting we can get, and then that ultimately drives the decision making that you make from that reporting. And so going from straight to the reporting without having good processes in the day-to-day and the monthly close can be, it could be sometimes we'll have to educate our clients around that. And they don't see a lot of business owners don't see the value because maybe they don't understand it or it's done behind the scenes in the blocking and tackling, right? And so helping them understand what that is, and again, working through that from their perspective on the cost benefit of what that means. And so basically saying, okay, we can't just give you reporting unless we validated the information and the numbers. So how do we get you what you need but also establishing the right foundation at the right cost point? And so, that's what we're always looking to create efficiencies as much as we can in the blocking and tackling, because that's the commoditized part of the work that we have, right? Which is a lot of it the business owner doesn't understand. So how do we do that efficiently, effectively? How do we leverage technology? How do we do things to get to the point where the business owner sees true value, which is in the visibility they get in their financials and the comfort they get knowing that, hey, you know what, I'm in good shape, or hey, you know what, there's some things coming up in the future that I need to be planning for. And so when you talk about pushback, it's more about making sure that in upfront, our model is very customizable. So are we customizing it with you appropriately upfront? And the challenge is, sometimes we don't know until we get our hands dirty and get in there. So, hey, let's spend the first couple of weeks making sure that we get in there, we make sure we develop a plan with you, we prioritize with you, and we understand the calendar and timeline of events. And from there, then we can say, okay, great. Based on your priorities, based on what we're seeing, based on what we're trying to accomplish, are we aligned on our price point or are we not? And that's a critical versus just jumping in and doing accounting, whatever that may be, right, without a clear plan with the client.
Yeah, no, I mean, I could draw a parallel in our business too, which is a lot of people, hey, we want a new logo,
Hmm.
but they want the output of the logo, but what they don't know about is the research and the planning and all this other
Yeah.
stuff. So that's why there's kind of a price point, a bigger price point attached to something like a logo, even though in their head they're going, oh, well, I can go to, Fiverr and pay somebody $50 to build me a
Hmm.
logo. So it's like,
Right.
okay, you can, sure. And just, maybe the parallel in your business and accounting is, well, my wife does our accounting and it's fine. She seems
Right.
to do a good job and all that stuff, but like, you guys aren't going to be able to sort of, I guess, put your guarantee or your stamp of we're all good on this
Yep.
using his wife's accounting. Like,
Right.
you're going to need to see something. So just like in our case,
Absolutely.
like you can tell us, well, hey, I really like logos, that feature bouncing ball or, whatever for our business. And it's like, well, that's great. But the research shows that people hate bouncing balls. So do
Yeah.
you really want to do that? I understand you feel like it, but do you really
Yep.
want to, And so there's these different layers to it. And so sort of just again, to draw that parallel between kind of what we're doing and what you guys are doing is that there's sort of a, the part that they see, which is, in our case, the logo, in your case, the final report.
Yep.
But in order for us to put our stamp on the logo and be satisfied that we did our job and that we did the right thing with that logo and that we're advising our customers in the right way, we need to have done that preliminary research. You can't just
Yeah.
come to me and be like, well, we think blue balls are really cool,
Right.
and so, and then in your case, hey, all I need is that report, just,
Yeah.
can
Yeah.
you generate the report? My wife already did all the accounting. I just
Right.
need your report. Well, good luck getting a firm like yours to like buy off on the, accuracy or anything else in that
Right.
data based on, Martha's accounting, even if she's good.
Right.
It's just,
Yeah.
you need to know, and
Yeah, and
so.
the financial information has to be prepared or present, done in a certain way to get maybe the output or the report that you want as a business owner, right? So maybe the financials are accurate, but you still got to reposition them in a way to get the final outputs, and also, to potentially to streamline it, right? So business owners, they want reports, they want it quick, they want it real time. And so to be able to do that, it's setting up the back end functionality and the data on the back end to produce the front end function, the front end reporting. And that's what needs to be communicated, and most business owners ultimately understand that.
Yeah. Well, Jason, it's about that time. You want to tell us how people can reach out and get in touch with you if they want to use your services or just have questions?
Yeah. Yeah, I can, always anyone can reach out over LinkedIn. Jason Kruger, that's Kruger. I'm a partner at Citrin-Couperman, so that's an easy way to find me. You can also email me directly, the letter J, Kruger, Kruger, at citrincooperman.com. Citrin is with a C, Citrin. And I just like to talk to business owners, and if I can help them provide some insight or value, that's great. If I don't have the answer, I usually know somebody that does, and I can make an introduction to somebody else, either within our firm or outside our firm in some other capacity. So I'd love to talk through things with people and see how I can help.
That's great. Well,
Love
thank
it.
you so much, Jason. We really appreciate you making the time for us today.
Yeah, thanks guys, appreciate it.
Absolutely. And thanks so much to everybody who tunes in the show this week and every week. And we'll see you guys next time.